Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased price action analysis. We got a big question that's on a lot of people's minds right now, or maybe. And that question is the top in? Is it in? Will the price action finally give us the answer? Because all it's been doing, it's been in the chop phase for quite some time now. Okay, guys, now let's talk about this chop phase. Well, I'm gonna go to a 1 hour chart for this. This is something that I've been watching and I've been covering it in my Discord, so definitely consider joining my Discord if you want all the best content and analysis from Uncle Charles. But you guys can see here, since mid-November, the SPY has been slowly creeping up, giving us higher highs and higher lows. But look, it came in the form of a rising channel. As you guys know, the market, for SPY at least, because we've been getting some good action with NVDA and the Tesla. But as far as the SPY has been giving us some pathetic price action, overall it still was giving us higher highs and higher lows, you know, coming off of that bullish month we had in November. But look at what happened today. Look at what happened today. Oh yeah, we got ourselves a breakdown, guys. I like breakdowns. Bulls, you guys might not like breakdowns, but I'm a sheep. I don't care if the market goes up or down. I just needed to make a decision. You see, when the market is trending, it made a decision. It's either going up or down, and we just follow the trend. But when it enters the chop phase, oh, does it get complicating? And when it enters the chop phase, you see, the point of the chop phase is to digest the trend move. You guys see, we had a crazy bullish month, a very steep bullish month in November, guys. So of course we were gonna get some choppy action eventually to digest that move. Bulls were spoiled. But where did it pause at? It paused around July high. And in my last video, I talk about how the double top is still in play. Yes, it's still in play because, well, we have not break out above that 459.5 level. And as long as we don't break out the 459.5 level, the double top is still a potential setup that we need to be wary of. Okay? So with that being said, we got that double top, or potential double top, I should say, potential breakdown of the rising channel that has been what's today's date? December 6th. It's been developing since mid-November. That's quite some time to develop a pattern. And now that we got the breakdown. That's a bearish breakdown. That is a bearish breakdown. So am I trying to convince you guys to be bearish right now? No. I am just translating to you guys what the charts are showing me and what the price action is saying. And what is the price action saying, Uncle Charles? Well, based on that potential double top and based on the breakdown of this rising channel, the price action is saying, well, it's making some bearish noises. You understand? What kind of noises do bears make? I know lions roars and stuff. What kind of noise do bears make? What do their roars sound like? Because whatever their roars sound like, that is the sound of the price action right now. Okay? I'm not saying this because I want to call a top, guys. You know me. I don't call tops. I'm just pointing out what's on the chart. The double top. And then on the 1 hour chart, we got the breakdown of this rising channel. Now the next question is, right? Because we're wondering, is the top in? The next question is, will there be follow through on this breakdown? Okay? What is the next level, Uncle Charles, that needs to break down in order to give us that bearish confirmation that you are trying to tell us about? Well, you guys can see here, we had a double bottom. from that 453.5 level. That double bottom for 453.5 led to a decent move to the upside. Okay? So if we can, just like with the double top, the way to cancel this double bottom is to break it down. So we got the breakdown of the channel. That is a start, a decent start for bears. If we can break down 453.5, it'll cancel this double bottom that we see here on the 1 hour chart. You guys see here, we cleared 453.5 back in November 22nd. You guys here November 28th and November 30th, a couple days later. Double bottom. If we can break it down, bearish. Double top, breakdown of rising channel, cancellation of this double bottom, bearish. But you know me, you know Uncle Chartist. I play it level to level. I'm sorry, guys, I play it level to level. I know level to level does not maximize your profits. But what level to level does is maximize your risk management. And when I try to create a trading system, I had on the top of the list of most important was risk management, and number 2 was consistency. Because I believe that if you can get real good with your risk management and real good with your consistency, and understand that trading is not a get rich fast scheme, it's a get rich slow scheme, and then you embrace the process, I believe you can be successful. And once you master your risk management, once you get real good at being consistent, you can always scale up. You can always go from 2 contracts to 4 contracts. If you can make $100 consistently using 2 to 3 contracts, then you can make more, in theory, using 6 contracts, 12 contracts, 24 contracts. There's levels to this. It takes time. You got to get better. You got to build your consistency. But that is the point. And with that being said, if 453.5 fails, I have the next support at 452, and I will look to take profit there if I get the opportunity to short this breakdown. I would take most profits at 452, and then I would leave a runner. Now, there's some people that ask me, Uncle, is your analysis applicable for swing traders? Well, I am, mostly a day trader, and my videos target mostly day traders as my audience. But I've told many people about this, about the importance of leaving runners, play level to level, leaving runners. Because when you play it level to level, let's say you short 453.5, you take most profits at the next target at 452, you leave your runner. If the market decides it's going to go down more, your runners will catch it. Let your runners do the heavy lifting. You secure most profits, and then you leave a risk-free runner. A risk-free. If you're buying 10 contracts, leave 3 contracts as runners. Leave 4 contracts as runners, preferably 3. And let your runners do the heavy lifting. You're in a risk-free position. You can swing those. And if the market is doing what you want it to do, guess what? You can always add to your winners. So if you're swinging runners and the market does what you want it to do, you can add to your winners using the levels, using the setups. Nothing wrong with that. The point is risk management is number 1 priority. Consistency is number 2. And then we want to work on our profits. Okay? So yeah, chart's looking bearish right now. Loss of 453.5 should trigger more downside. Put in 452 in play. Now, I should be a little more specific. I have a zone. 451.7 to 452, okay? Because I keep saying 452. It's 451.7 to 452 zone, okay? That is a critical level. And below that, the next critical level is at 448.7, okay? Why are those levels critical? If I zoom out, you guys see the yellow line. Those are fib levels from all-time high down to October 2022 low. I have the 78.6 fib level at 451.76. So we give it a zone. 451.7 to 452. All right, so if those levels break down, we maintain the breakdown of this rising channel. We break down 453.5. We break down 451.7. That's bearish, guys. I know my levels are sometimes close to each other, but listen, look at my levels as stairways, stepping stones, okay, to help you interpret the price action. So if we're breaking down those support levels, the price action is bearish. So if you're trying to hold out, swinging positions, hoping for a bigger move to the downside, use my levels to help indicate to yourselves that, hey, we broke down that 451.7 level that Uncle Chartist guy mentioned. The price action is bearish. I might as well keep holding my puts. Because when these breakdowns happen, it doesn't mean, they do serve as entry points. But they can also serve as a message to you in case you're already holding position to either keep holding or take profits. Does that make sense? So, let's try to keep this simple, guys. Loss of 453.5 tomorrow is bearish, along with 451.7 and 448.7. Loss of those levels will trigger some deep pullback. Okay, so deep pullback down to 446. That's where the gap starts. And it's very possible we go and fill that gap. Even if SPY goes down to fill that gap, it's still overall bullish. But a retracement or a pullback would be healthy because look at how steep that move is in November. Okay, so watch those support levels. Now, I've been giving you guys the bear case scenario. Please keep watching the video because I got to give you guys the bull case as well, all right? From here, the rising channel is going to slope up tomorrow. So around that 456, 456.5 zone, that's the levels to watch in case we get a recapture. If we do get a recapture to that level, then obviously the breakdown of the rising channel is canceled. All right, 456 to the 456.5 level. If we recapture that level, breakdown is canceled, and that can serve as an entry point for calls or longs. Keep in mind, Darkpool level, 2.6 billion in premium at that 456.41 level. Okay, it's a few cents off of my level, but that's around July high. So around that zone, guys, if we clear it, that's bullish, and it cancels the breakdown of the rising channel. Okay, and with that breakdown, we're attacking liquidity, stop loss hunting, whatever the market makers might be trying to do. If we recapture it, I would look to long, and with that false breakdown, we could head up a lot higher to a higher high for 2022. So bull case, gotta recapture 456.5. Bear case, gotta break down 453.5 and 451.7 to be bearish. Bah! Now, Triple Q, 3 days in a row of closing below that 388 level. That was July's high. It's looking bearish right now, especially with that red candle, big body red candle. Okay, follow through tomorrow would be to break down 384 and 382.6. If those levels fail, we are likely heading a lot lower, maybe even to fill the gap at 377ish. Below 377ish would obviously be a lot more bearish, with 375.6 as the next critical support level and potential bounce zone. All right, I can only get bearish on Triple Q at this point if it recaptures 388 to put 390, 392, and 394 in play. IWM got a false breakout setup right now, guys. That's bearish. We cleared a fib level, 184.5 level on Monday. Today, it closed below. As long as below 184.5, the false breakout setup stays intact. As long as the false breakout setup stays intact, I am bearish, and it's very possible we head lower down to 182 and 180, okay? This false breakout setup only cancels if 184.5 recaptures. If 184.5 recaptures, that's when you want to look to long with 186 and 188 back in play, okay? Tesla, beautiful, beautiful stock. I love this stock. I cover Tesla a lot. I give it its own room, Tesla room. Covered it a lot. While SPY was chopping, Uncle has been trading Tesla level to level style using the sheep style trading system, and it's been giving us beautiful moves. But gotta go on that daily chart, look at the bigger picture. Overall, Tesla has just been chopping, but the difference between Tesla and SPY when Tesla chop is that it's still tradable because the chop range is overall is still pretty big. Okay, so we guys can see here, I know it's a lot of lines, guys, but I need those lines for my pivot levels into trade tomorrow, okay? But let me tell you, we had a lot of buying pressure from that 231 level, and we have multiple selling pressure from that 247-ish level. 231 to 247 is the chop zone for Tesla. Okay? Now, right now it's around 239. I have support at 238, 236, and a Fibonacci level at 234.6. Below 234.6 is a bearish price action indicator. Below is bearish. It puts 232.5 and 231 back in play. Below 231, bears are in control. Why? Because we have strong buying pressure. Look at all those wicks. That's a buy zone. So if that buy zone fails, that's a sign that the buyers are out. They're out. They're out of strength. They're gone. They're all absorbed. And we are heading down lower. Okay? Now for the bull case, it got to clear a bunch of levels. 240, 242, 244, 245.5, and 247. All right? Above 247, the chop range ends in favor of the bulls, putting 251 and 252.5 in play. Okay? Apple, this is an interesting setup, guys. Let me go on. Let me see. We had the bull flag. We broke out Tuesday, but look at this. Look like a dark cloud cover candle. That is usually a bearish reversal candle. All right? We'll get the confirmation with the third candle tomorrow, hopefully. But let me tell you, you're going to need to know the levels. And the level that needs to break down tomorrow is 191.2. If 191.2 fails tomorrow, guys, we are bearish on Apple. That's a false breakout setup of the bull flag and the dark cloud candle cover. It plays out. Okay, below 191.2 is bearish on Apple. From here, 193 and 195 are the levels that must clear and recapture if it wants to give us more upside, putting 197 and 198.2 in play. Okay, NVDA. Wow. I give NVDA its own room. This is exclusive to tier 2s and tier 3 members. Tier 1s members, sorry, but you guys got SPY and Tesla. But I tell you, this action on NVDA has been phenomenal. All right, I'm trying to find the first post of the day. Okay, so I have here, first post, 9:22 a.m. I have support at 472 and 470. If 470 fails, look to short with the lower targets in place. So we're looking to short below 470, and we was looking to long above 476 and stuff. What did the, it's not predictions. We're looking to react. And what did the market do? It opened up by breaking down 470, going as low as 454. Holy moly, guys. We made some bank today. But yeah, where do we go from here? So I have fib levels as always. I have a fib level at 458. We lost that level today. We're in breakdown mode, okay? As long as below 458, I am bearish on NVDA, okay? Now it's around 453.6. Next support is at 452 and 450. We had some bounces from that earlier this week. Can those levels hold again? If 452 and 450 fails, we're going to test this downtrend line. Is at 447. Look at this downtrend line from August high. Okay? We got to bounce off of it recently, but it might be a dead cat bounce. But overall, below 447, that's a big critical level. Below 447 would be false breakout mode on NVDA and extremely bearish. Hear me out, extremely bearish. You don't want to miss the move. All right? Now, if we bounce from here, obviously, we need to clear some resistance levels. 454, 456, and of course, 458. That's the fib level, critical level. If we recapture 458, I would be bullish on NVDA and favor more upside. All right, guys. Amazon got a breakdown of that Fibonacci level. We tried to recapture it yesterday, broke down again. As long as below overall bearish below 146. All right. I'm overall bearish below 146. So if we recapture 146, then maybe bulls will have a shot to head back up to test the top of the megaphone pattern, which is around 151.2-ish right now. But overall, as long as below 146, I would stay bearish. Next support is at 143. If that levels fail, next support is at 144. Sorry about that. 144 fail. If that level fails, 142 and 140 are in play. Below 140, bears in control. AMD does not look bullish to me. It doesn't. All right. You guys recall I mentioned this multi-year trend line, yellow multi-year trend line, all-time high, June high, all that happy stuff. Okay. Let me go back closer. Now you guys can see here on November 29th, we had a breakout, and then November 30th, false breakout when we broke back below. Now what happened today? Today's action is very important. We had a false breakout, and then look where we had the wick. Look where we had the selling pressure. We had selling pressure right from that multi-year trend line. So we had a breakdown, and now today, the price action confirmed that breakdown. It confirmed it. And not only that, it broke down a fib level at 117.5. So as long as below 117.5, I am bearish on AMD. Bearish follow through would be to break down 116 to put 114.5 and 113 in play. 113 could be a potential bounce zone, but I don't know if it might be just be a dead cat. But overall, to be bullish, I need to see it break back above 117.5, 119.5, and especially 122.2. That's a fib level, and a break above 122.2 would break out the yellow trend line. All right, Meta still overall looking bearish. It's just been consolidating a little bit, but it's looking bearish still. If it can break down 315 tomorrow, look to short. That is bullish. I know the RSI is oversold, but it can get more oversold or stay oversold. Just follow the price action. If it breaks down 315, don't argue with it. Just go with it. And I'll put lower targets in play down to 313, 311.5, 310, maybe all the way down to 306. We'll see. For my bearish sentiment to cancel, resistance must clear 319 and 321. All right. If 321 clears, I would be bullish and favor a lot more upside. All right. Netflix is looking bearish. Yeah, we had some, some certain selling pressure from July earlier this year and around the same zone. Just selling pressure from that same zone. Potential double top. We also broke down a Fibonacci level at 455. As long as below 455, I am bear bias on Netflix. Okay. Next support right now would be next support would be at 445.5. All right, we break down 445.5. We are dropping a lot lower down to 444, maybe all the way down to 440 actually. All right, resisted is at 449.5, 451, 453, and 455. I will only be bullish above 455 and favor more upside to play the false breakdown setup combined with the oversold RSI. All right, but the price action has to be the leading indicator. Okay, Google. Well, we got a bounce off that 38.2 fib level, and then the next day it showed some follow through by recapturing the 50% fib level. But today, looking like a dead cat bounce, closing back below 132. As long as below 132, I am bearish on Google and favor 129.5 test again. If that fails, though, we are heading a lot lower. Gap fills at 127.6 and the next fib level around 126.4. Overall, bearish below 132. Bullish above 132. If we recapture again, we could possibly head back up to 134 plus, maybe even higher. Okay. Now, this next one that I'm about to cover has been brought up a bunch of times by my members, so I just want to bring you guys that value. You guys can hear my voice, and cover it. TLT. All right. I actually covered TLT. This was exclusive content for Tier 2 members. I actually covered TLT this morning around 8 o'clock. I gave us the plan right there. But overall, the plan was I was watching this trend line, and I mentioned we get above the trend line, which is around above 94.7-ish. I mentioned to stay bearish, and my next target was at 96. We actually hit 96.05. All right. So overall, above 94.7 is breakout mode for TLT. As long as TLT stays in breakout mode, it's safer to be bullish. All right. And with more higher targets. Above 96, I got 98.6 and gap fill around 99.7-ish in play. All right. If you want to get bearish on TLT, like I said, we got to wait for that false breakout setup. And if it can break back below 94.7, that could serve as a good short. All right. Break below 94.7 and 93.5. Those two levels fail. I'll be bearish again on TLT. with 91.8 and possibly even lower down to 87.6 in play. All right, VIX. I haven't covered the VIX in a while, and you guys can see why I don't cover this crap, because it just moves like crap. But hey, might be worth watching. All right, because here's the thing. We're testing some critical levels here, guys. You guys see all this buying pressure? Yeah, I don't really want to cover the VIX, but if I'm gonna cover it, I might as well cover it when it's actually around critical support level. And what's happened a lot when it's been around this support level, this is usually where it bounces. And if the VIX bounces high, I mean volatility is returning. And usually when the VIX goes up, the SPY goes down. So definitely worth watching. For me to trust a bounce on the VIX, it needs to get above. You know what? To be safe, I need to see it get above 14. If VIX can bounce, I'll take the bounce more serious if it gets above 14. Above 14, I'll be bullish on the VIX and favor more upside. Below 12.6 is bearish on the VIX. All right? And if the VIX drops lower, that means volatility is likely lower, and that's not what any of us wants to see. All right? Now let's get to the option flow. We know Darkpool order 2.6 billion premium at 456.4. A lot of the big money people, they're hiding their intentions using Darkpool, guys. But they can't hide where they're doing their activity. We don't know who or what is doing what, but we know that there's a lot of activity around there. And that's a level I've mentioned to you guys a lot. And obviously, like I said earlier, above it is bullish, below it is bearish. And we'll see what happens. But here is the option flow. Filter for 100K premiums or above. And right now, it's overall bearish. Triple Q. Okay, so yeah, higher quantities in puts, but higher premiums into calls. So it's overall bullish. IWM's overall bullish. Tesla is overall bullish. And is somebody buying the dip or something? Like what? Apple is a little more edge in calls quantity, but premium is higher for puts. AMD, bullish. Meta, bullish. Oh my goodness, I'm tongue's twisting up over here. Netflix, nothing for Netflix. GOOG is bullish. GOOG with the L, nothing. TLT, got anything? What the hell? TLT 100% bullish. Amazing. Got some above the ask. All the way out from March. This is the first time I'm looking at TLT, but yeah, this is pretty one-sided, guys. And let's see the VIX. Oh, it's straight up bearish. Interesting. All right, guys. Thank you guys so much for watching. If you guys want more content from Uncle Charles, please consider joining my Discord. I still got the discount going. Definitely take advantage until it runs out. Other than that, have a great evening. Peace.